So if we have an asset, right, and this asset comes down and then it comes up, rejects here, and it comes like this, and then it comes to this point, and then it comes to this point, and then this point, and then that, and then that, and then that, and then that. Okay, so now at this point, what we have to realize, this is the point of interest right here. Okay, I'll have to change that because I muted it before, so let me just make that brighter. Okay, and I'll make that solid. All right, so this is the point of interest right here. You know, I mean, it's one of them. There's obviously this one up here. We're going to pretend that this is a high right here. Got to start double clicking on things. So we're going to pretend that that is the high. And then this is the low, which it obviously is. Okay, so these are the three main points of interest. This is the range in which you're stuck in, but this is what's happening on a lower time frame. And you see this all the time, right? It's happening right now. Like if you look at the Bitcoin chart, it's literally happening right now. And what this is doing, or what they are doing, more aptly put, is they're building up liquidity, because there's a very important thing you need to keep in mind, that we all need to keep in mind. When we have, I just want to make sure that you can see my chart when I switch to this one. Yeah?
Yes.
Okay, cool. So what we need to keep in mind is that there is a small amount of people that really control the way in which the chart moves, okay? And they use everybody else to kind of, help them build momentum, to follow them. They want people to ride their coattails because they can't do it without them. And them is us, right? Even no matter how skilled we are, we're still them to them, if that makes sense. They need us to fill their orders. And the reason in which that is because, like, say we're here in this point in time, these people are not trading 10 grand, 20 grand, 100 grand, 500 grand. They're trading 500 million, 750 million. They cannot click market sell right here and fill that whole order. If they did, all it would do was this. They would start that order here, and then it would fill some, fill some, fill some, fill some, fill some, and it would keep going, and it would dump the whole price. But they wouldn't be selling at 32,450. They would be selling at an average of 24,000. You know what I mean? Depending upon the size of their order. So how they combat this is by doing exactly what is happening right here. So if you look closely right here, they're building liquidity. You know what I mean? Think about it as swing highs and lows. And the way in which you can tell the direction it's going is a bit more complex than I can say in a couple sentences, to be sure. But you can look at it and you can see that battle happening. And a lot of people are like, oh, this is the bulls and the bears and blah, blah, blah. And, well, yeah, I mean, it's not completely wrong. It's just not very accurate, is how I would put it. So at this point in time, let's just say that the big money, the market makers, are trying to short Bitcoin. And they took their first short here, right? Now, they're not going to put all their money in this short and just expect it to dump. They know that that's not how things work, because first of all, they short this and dump it big time. People are going to be like, oh, this is the bottom. It's going to boom, blah, blah, blah. Or vice versa. So they bait people into things, and that's why these things step down. And this is to answer another question you had the other day about like wedges and triangles. It's the same thing. It's the same concept, because if you think about it, like wedges and triangles, they essentially like just kind of wedge into this little spot, and it just kind of builds and builds and builds, and then boom, it dumps or it pumps, and there's a lot of other variables that kind of lead into what is it going to do? Is it going to dump or pump after it kind of builds and coils up in this? That's where the higher time frames come into play. And that's what I was saying earlier about we have to go with the narrative of what's been happening. And if we look at the daily or the weekly or monthly chart, like this thing's going down, man. You know what I mean? And as soon as it touches an EQ, and this is why in which I said that this level right here was really important and the one that I thought it was going to dump off of. And it swept across it, above it a little bit, to be fair. But, I mean, it never even came close. So what was this candle? 25,199. And this is 25,006. So, but I mean, you can see it was like hitting that right there. And then it swept it and then dumped. So when I say sweep, it's just grabbing liquidity to move in a direction. And the reason in which I say that is because they can't just click market sell or market buy or even limit, especially limit or limit, sell. They have to do it in pieces, and they have to do it from multiple accounts. So trading with such a large amount of money, they have to be strategic about it. And if they jump all in too much too fast, people are going to get excited or fearful, and they're going to follow that trend, but that's not the trend that they want them to follow. Does that make sense? So
yes,
they're
controlling the price at which they're selling in increments rather than one go.
Yeah, because it let's just say like this is the point right here, like that they want to it's a terrible thing, that they want to short. And if they like put everything in right here, it's either it's gonna just continue to dump, but their whole order is not going to get filled here. It's going to get filled here and here and here and here and all the way down. Whereas if they would have just been patient and used multiple accounts, they could have done this. They could have been like, all right, I'm going to fill 25. These are arbitrary numbers. I'm going to fill 25% of my order here. On another account, I'm going to buy enough to make it move up on a smaller time frame, and then I'm going to fill the rest of that order there. I'm going to buy again on that other account, and I'm going to sell again on that other account. You see what I'm saying? And they keep flip-flopping back and forth. You can't do all this on one account, and you have to be very strategic about the way in which you trade these large position sizes, because it's not like us. Like we're trading 10 grand, 20 grand, 50 grand, whatever, 1,000, whatever. It doesn't matter. We're trading small amounts of money. Anything under 100 grand is a minuscule amount of money. They cannot approach the charts in the way in which we do. And our goal is to follow them and ride on their coattails, like I said before. As demeaning as that sounds to us, I mean, it is what it is, right? We don't have hundreds of millions or, billions of dollars to trade with. We can't control the direction of a chart. I don't give a shit what anybody says. Like, we can't do that, right? We have to follow the footprints that they leave. And if we want to be really good, we want to predict where their footprints are going to be before they've even made them. That's right there, in my opinion, like that's where the skill in trading comes into play. Predicting where and when they're going to do a thing that they haven't done yet. and it's inevitable in what they're going to do. Like, they have to do these things. Like, there's just certain things they have to do because of the amount of money that they're trading with. Like, they cannot, like, they're not looking at a 1 minute chart and being like, all right, here's the 1 minute chart. I'm going to get this trade to the dollar and da 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 and hit here. No, bullshit. Like, that's not happening. That's not a thing. Like, there are people doing it, but those are not the people that are controlling the charts. The reason in which that is happening, in my opinion, is because these things are happening on a much higher time frame. You know what I mean? Like, this level that was like hit to the dollar, it doesn't really mean anything. You know what I mean? What means something is this one and this one. And that one really doesn't mean as much as this one and this one. But these are all things, these are all dominoes on the table, you know? And we all have our part to play, and we just have to recognize that and then, you know, learn how to utilize it. So, liquidity, conscious trader, is essentially getting people to get into a trade, like right here. Look at this thing trying to dump right here. Boom. It's trying to dump. So, liquidity, like right here, you have this high. It's this little effort will freaking right there. All right, so you have this high, okay? Now, when people see this high and you're, say, right here, they're like, all right, when it comes up here, I'm going to short this level in here, right? And then their stop is going to be where? It's going to be right above this high, okay? Now, comes down. All right, I'm still in it. I'm still good. And this is why I say don't adjust your stop loss until it's like very apparent that you can. So it comes up, tags it perfectly, but then look over here on a second chart, it sweeps it and it grabs those stop losses from this, and this. That's a sweep, and a sweep is grabbing liquidity. So it's grabbing all the people that were shorting, right? All these people were shorting, and they grab the, thank you, baby. And they grab those stop losses to fuel their move down. Like, that's how they fill their orders. I know that's not perfectly like explained well. I wasn't really kind of prepared for that, but I'm writing it down to explain it better.
I actually think that's an excellent explanation. Thank you.
Okay, yeah. I'll think of a better way to explain it.
I think that was great, actually, the way you explained it.
Oh.
So really, liquidity is any of the stop losses that are there, that are just sitting there waiting to be grabbed to move into the direction that it's proposing to go to, or creating. I guess, like, in a way, it sounds like liquidity really is like a momentum.
Yeah.
That's pulling it into. Okay.
Yeah.
Yeah.
It's.
Okay.
I mean, it's essentially like, think about it like this. Like, say I own a house and a boat and a car, and then I have $10,000 in my bank account. My liquid assets are $10,000. You know what I mean? Even though I have hundreds of thousands of dollars of other things, they're not liquid, right? Like, I can't utilize them unless I, sell or buy more. You know what I mean? Like, I have to transition those assets into a liquid form, which tends to be dollar bills. So it's the same thing. Like, these people, these market makers, they have an intention, and even though they have $100 million to trade, it's not liquid until they sell or buy, right? Until they apply it to the thing in which they want to apply it to. Now, if they do it too soon and all at the same time, it's just they're gonna get a shittier price all the way down. If they sell from right here all at once, it's just gonna keep going down. And, you know, I don't know how many of you have like filled, not a large order, but something like over 10 grand on an order. You're not, more times than not, you're not getting that order filled at the same price. It's like pieces, right? All right, you got this sell here and this sell at this price and so on and so forth. And it's like 5 or 6 or 7 different prices. So think about it that way. Like they want to get the best price in which they can, and they have to be strategic about it, and they have to sell off a portion and then using another account buy to get the price to go back up so they can just sell more, which is their overall goal, right? So they have an overall goal, but then they have like little mini goals inside of that to achieve that overall goal, I guess is the best way I can really put it. So we just have to kind of think about things from a different perspective, not one where we have the money that we have, because we don't have the money they have. Let's be real. I certainly don't claim to have some massive amount of money. I mean, none of us do. I know Sean likes to say like, "Oh yeah, I've got traders trading $100 million trades," and BS. No, you don't. So we just have to kind of learn how to put ourselves in their shoes and think the way in which they think, because in doing so, that's how we can predict where those footprints in the sand are going to be before they make them. And once we realize how to do that, that is our best advantage in all of this, because we have to realize that we're competing against them. We're not competing against each other. You know what I mean? Like a lot of people would like you to think, oh, you're competing against all the other traders. That's not true. We're competing against the people that are moving the charts. That's it. You know what I mean? Like, now, if we can get on their side and predict their footprints in the sand, so to speak, then yeah, I guess we are kind of competing against ourselves, but just from a different perspective. I know that's kind of like convoluted and kind of jumbled around, but we want to basically, as simply as I can think to put it, is we want to learn to be on their side and to compete against ourselves where we are at right now. Because until that point, we're just, they're just using us. And that's why 90+% of people fail in trading, because they're puppets. You know what I mean? We've all been that way, either at some point or we are now. And it's not something to be ashamed of. It's just part of the process. You know what I mean? I've certainly been there, and I get caught up sometimes. So it's not a bad thing. It just is a thing. It's just how it goes. But the important part is breaking out of that cycle and not letting them like dupe you and fool you into being the literal mouse taking the cheese out of the mouse trap, so to speak.